Shares of Chinese online retailer Pinduoduo surging after beating estimates in third quarter earnings. Deirdre Bosa has more on today's Tech Check. Hi, Dee.
Hey, Mike. So I know you guys have been talking a lot about Shein today. Temu, that's the other Chinese e-commerce app taking the American consumer by storm. And it is crushing Shein on sales and monthly customers. According to Bloomberg's second measure, Temu surpassed on both metrics this year and then has continued to pull ahead, as you see in this chart, which raises a question that Bernstein asked in its note today. If you're bullish on Temu, do you short Shein out of the gate? This morning gave the bulls even more reason to like Temu as parent company Pinduoduo reported results that are sending shares nearly 20% higher. The biggest driver, that would be Temu. Revenue overall nearly doubled year over year. And while sales and marketing expenses, they were up 55%, losses were less than feared. Now, it could also be a good sign for Shein if it is using a similar playbook. Both platforms offer steep discounts on already cheap stuff, essentially subsidizing to gain scale, capture the American consumer, which in the past has been a very risky strategy. But Pinduoduo tells us that there is, in fact, a path to profitability. Bernstein notes that Pinduoduo went from negative 100% to positive 60% margin in China and figures that Temu has already hit break even in the U.S. on a unit economic basis. So how? Well, one, slightly higher markups eventually, and two, less discounts as American shoppers become entrenched. Now, another interesting advantage that it could use against Amazon, lower take rates for merchants. Now, Shein could employ a similar strategy. In the first 9 months of the year, Pinduoduo, that's Temu-parent, notched more than $5 billion in net income and had nearly $8 billion in cash and cash equivalents. That is a lot of capital that it can continue to use to capture an American audience through discounts and marketing. Of course, we don't know if Shein is profitable or anything about its cash position yet because it's private, but an IPO, if successful, guys, that would certainly add to its pile and give it ammo to both compete with Temu and capture more customers here. One more chart I want to show you guys. It looks a lot like the first one, but it shows U.S. monthly customers. Shein has dipped over the last few months while Temu continues to pull further ahead. Goes back to that question, can you like both or do you need to choose one over another, which will be an interesting question when Shein does move forward with that IPO.